you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology. You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Friday, 18th day of January, 2019. It has been a frustrating 24 hours wrestling with the internet and still wrestling. trying to get things back on track, back up to speed. Hopefully you can hear me okay. I think YouTube is broadcasting loud today. Hello, Robert. Recorded message. I'm not sure what that is. But yes, we are here. Thanks for joining us. Okay. I've got a chart up of the S&P 500 Emini Futures. Take a look. If you can't see the chart, go to our homepage at CFRN.net. On the right-hand side of the page, just click the big microphone, follow the instructions, you'll be registered, and you'll have access to the show each and every day. When you're away from the office, maybe you're working off a smartphone or a tablet, or just using a computer where you can't download the GoTo software, just go to youtube.com/CFRN/live, and there you'll find us, providing a simulcast each and every day during the live broadcast, and thanks to YouTube for carrying the show. Now, if you're returning, welcome back. If you're here for the first time, a special welcome to you. We are certainly glad to have you with us on this very eventful Friday, as we have moved significantly above the highest weekly trading zone. We've been publishing the zones since December 14th of 2009. That's a long time. Now, moving above the highest or the lowest weekly trading zone is not an unheard of situation. However, typically when we do break above or below the highest or lowest weekly zone, price will wind its way back below or above, whichever the case is, by close of business on Friday. Now, as we sit, some 30 points above this highest weekly zone, I don't foresee that happening, but you know what? With all that we have going on right now, geopolitically and otherwise, I can't rule anything out. This move higher, well, you know, the market, it seems to have a purpose. It seems to have a destiny. It acts like it's trying to go somewhere. Let's take a peek and see where it might be headed. Let me get these out of the way for a minute so you can see clearly. Bearish cross, price pulls away, price pulls back to physically touch, down close, and the leg. Just like you see it in the live training room every day on the range chart, except this is a weekly chart. Each one of these candles represents a week. And that bearish cross took place on the week of November 9th. Pulled back, hit the BBC on the week of December 7th. And then 1, 2, 3, 4, 5, 6 weeks later, we're back to the BBC. Now, one of two things happens here. We cruise through it, or it becomes resistance, and we attempt another leg to the downside, keeping in mind that this could become support, or not. If we look at the monthly, you've heard me say this many times, we've not had a bullish cross on this chart. I'm on the continuous chart here, and as far as I can get back is 13. Got a leg up, we had a retracement, we came down and kissed the BBC, took off, and here we sit. Okay. And again, this was the, according to the pundits, worst December since 1931. These are monthly candles. Okay. Now, although we've not had a bearish cross, I want you to take a look back here. When we went through, we had a CFMA1 that was red and falling. Okay. And it fell for 1, 2, 3, 4, 5, 6, 7, 8 months. 8 months. But look down here at the slingshot. it did turn red, but it was never really red and falling, and it certainly remained above the 50-yard line. And that's what I call this guy right here. Look where we are now. On the monthly, we're about to cross that 50 to the downside. We haven't crossed it yet. Could it turn right back up like the market turned back up here? Sure it could. Is the monthly determined to go up here and hit that? Well, we haven't even had the bearish cross yet. Remember, we've got 5 years I can track here where we've not had that. Okay? All right. So that kind of brings you up to speed on where we are right now and where the market is right now, 2671. And on the weekly, we're looking at 2678-ish. We're in the neighborhood. What happens next? Believe it or not, I don't know. We never know what's going to happen next. We just deal with whatever is right in front of us. Now, because we've had the internet connectivity issues in the alert channel, the last alerts I was able to get out, I think, because my charts, I could never be, because the internet fades in and out, I could never be sure if my charts were updating properly and if I had the most recent price. But when I was sure, we had a 2621, and then we had a 2628, which was to take us up to the highest weekly trading zone and trail if possible. So we punched right through the thing. This all happened in one 30-minute candle, and this took place yesterday at 2:30 p.m. Eastern. Price ran in that 30-minute period from the open of that candle, 30-minute candle, at 2622, put in a high at 2645. That's a 23-point candle in 30 minutes. Now, anyone who's been around for a while knows that that's a typical daily range under normal market conditions. One candle, and 2:30 in the afternoon is typically not a hotbed of activity for the market. If we take a look at the volume on that candle, 283,124 contracts, over 250,000 contracts, almost 300,000, traded in a 30-minute period of time. To put that in perspective, typically the single largest 30-minute candle of each trading session comes at 9:30 a.m. right here, Eastern, when Wall Street opens. Now, we talked about the fact that we had a large opening candle here and another one earlier in the week. This one at 9:30 a.m. yesterday, that one stretched from the 2606 up to 2617. So an 11-point opening candle followed by this 23-point candle. Then what do? We pull back to the weekly trading zone because we've gotten above it, so we've got to come back and see, is it going to be good support? We pull actually in the next 30-minute candle back below that 2628. Important prices, important areas are almost always tested. If you take nothing else away from this radio program, take that with you wherever you go. Important prices, important areas are almost always tested. So on 21, we get a little pop up to 23. Get back below the trigger, we hop up again to 2625, and then we pull back and we don't get below the trigger right there, 2621 and a quarter. Okay, Then off we go. We rip right through 26.28. It takes us again all the way to 26.45. We come back to the zone here. We consolidate, and we begin to wind our way up in search of, for now, let's take a look at the daily. On the daily, we've, from the last swing high to the swing low, we've moved through the 62% fib retracement. We have this trend line overhead. So let's go ahead and take a look at this whole leg down, the entire leg, not just the last leg down. Let's go to the entire leg from the swing high to the swing low. Aha. So now we have this trend line, and we have, in the entire move down, we have the 62% fib retracement sitting right here at 27.10. So, and we've got this trend line sitting at roughly 26, oh, we'll call it 26.85. Okay. Now if we go back to the weekly, we're sitting at 26.80. We have made contact. Houston, we have contact. If this month closed right here from a candlestick perspective, and if you've not read The Secret Life of Candles, if you Google CFRN, The Secret Life of Candles, you'll get a little slideshow that shows you about 10 of the more important candlestick signals, which is not the latest thing to come down the pike. Those have been around since the Japanese rice traders a few hundred years ago. That's how long they've been around. So remember that candlesticks are a graphic representation of investor sentiment for whatever time period you're observing, whether it's 1 minute, whether it is hourly, daily, weekly, monthly. Now, let me look at the chat box here real quick. Gary says, it's my understanding the NYSE is closed Monday. Will there be a Globex session on Sunday night? There will. There absolutely will. And I'm certain the internet will be working, or I'll just go somewhere else. Now, Mike asks, can you draw a line across the tops of the swing highs on the daily chart? Well, which ones are you talking about? These three? And my horizontal, the horizontal red line on my cursor. Yeah. See, we talked about this as it was happening. We had a leg down, retracement, which becomes a swing high. You don't know it's a swing high till after the fact, but it becomes evident down here. Now we're on the daily chart that was a swing high, right? So we put in a leg and a retracement, which gave us just a slightly lower high. Another leg, a retracement, and again a slightly lower high. So we had a high, a lower high, another lower high, and we all know what happened next. Now, from here we've gone leg, retrace. This is a big leg, okay? Now, price always reverts to the mean. The farther price gets away from the mean, the more likely, the higher the probability that it's coming back. Okay, so in other words, you were talking about this one. Okay, Mike, gotcha. Now, you'll see what I did is I say that wick just spiked that trend line. Some trend line purists, which I'm not a purist, I'm just a guy that draws trend lines. Nothing fancy. And if you're new to drawing trend lines, I encourage you to watch a video Bert and I made. It's been quite a few years ago. It's called Drawing Trend Lines with Bert. And I know the link's out there floating around somewhere. If you watch that, Bert does a great job over the course of about an hour, hour and a half, explaining everything there is to know about drawing a trend line. And the big takeaway from that is don't worry about getting it perfect. If you're new to drawing trend lines, just start drawing them. Just get used to drawing them. If it's a little off, you don't know exactly where to, do I put it there so it has to come all the way up? Or can I take liberties and look at it like this? You know what? You can look at it like this until, let's say, price shoots through here, right? Takes out this trend line, maybe even holds it on a pullback. Well, then you gotta adjust for that. And if it blows through that, well, now you're on to looking for something else. Okay. All right. Now, have we exploded the upside on the Dow? Yes, the highest weekly trading zone on the Dow, 24,400/405. Now, look at all this consolidation that happened overnight between 24,400 and 24,405. What do we got? Once we hit that zone, now remember we hit it earlier in the day, okay? And we consolidated for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10.5 hours roughly. Okay, and then at 6 this morning Eastern, market came alive. And now today at 9:30 a.m. Eastern, price was here. It closed, the first 30 minutes closed here. That's a big red candle. On the S&P this morning at 9:30, we have the same dynamic. Price comes back to test almost the low of that previous candle. But you can see as the market walks sideways here, as it consolidates in this area, it creates an area for support, and so does price come back to test it? It does. Does it come back to test it again? It does. And this outside candle caught my attention. Had it closed red, and it almost did because it became a doji in just like the last few minutes, and then it turned green again. So having an outside candle like this in an uptrend that closes green, it's more of a continuation signal than anything else. Had it closed red, or had it closed with the doji, that would have been bearish in this context. And this was probably the last time that I thought today that price would come back down to perhaps, before the close, get below this highest weekly trading zone. But by the time this candle was finished, I had pretty much written that off. And so now we watch. Does anyone in the audience know, and on the, I think on the YM, that outside candle was very pronounced there? And by outside candle, do you see how the high is above the previous candle's high? The low is below the previous candle low. We got more of a doji there on that one. What about the Russell? Yeah, outside candle on the Russell right there. This one actually closed. Is that the one? No, that's the opening candle. Here, the outside candle here was the 10 a.m. candle. On the ES, the 10 a.m. candle, but on the Russell, the outside candle was actually the opening candle. How about the NQ? They've all exploded higher to the upside. Look at the NQ, how long we consolidated. Now, is that the highest on the NQ? No. That's the next to the highest. The highest this week is 67.80. /85. So we move that up. 67.80. 5. Okay. And this will be 67.80. Oh, by the way, Agnes is coming in from Africa this weekend. She spoke at a conference in Atlanta yesterday, and she'll be here for a period of time. So if anyone, anywhere in the country, if you would like to meet her, to back up for anyone that's new, Agnes and Pastor Chris are African nationals. My wife and I met them back in 1998, 99-ish, and we began the orphanage in 2000. That's when we bought the first property and broke ground there. So I'm going to have her on the show, try a couple of times while she's here, just right here in the studio. So we'll have good clarity, and so I hope everyone will be able to join us for those discussions and bring any questions you have about the work that's going on there, the education, the kids. So much has happened since we broke ground in 2000. It's hard to imagine that was 18 years ago. My wife and I, on a Wednesday night at church, made the decision, let's do this thing. We didn't have the money. We didn't have the knowledge. We had, all we had was God's hand at our back, nudging us, pushing us, sending us forward. And so we looked at each other that night and said, okay, let's do this thing. And now here we are. And so it's always a great time. Now her son, one of their children, the last, he got my first name, he's got my middle name, and he was born here in Phoenix. And I guess you can figure that out. The reason behind that, he's my godson, little D. I'll put a picture of him up on the blog or on the channel. He's really grown since he was here the last time. Okay, so on the NQ, 67, 80, 85. All right. All right, I'm going to pop back here one last time. I'm going to stick this in for just a minute, give you some perspective. Okay. Now, from this 28, okay, did we get exit signals? Yeah, we did. We got one right here at the zone, right? Step line crossed over. We got a red close below the step line. Now, there are methods for re-entering, even when you don't have when you see this, you kind of just got to go with it. Of course, price never got below the BBC. We did come back to test it here. Got an up close. So the open of this candle at 26.41 is now taking us up to 33 points. Okay. Now, is this thing just going to continue and go to the moon? No. The trees don't grow to the sky. And this market, do you see how far away we are from the mean? Price always reverts to the mean. Okay. The highest probability of when it reverts is that it will continue. It'll bounce. This will hold as good support. All right. How long we've been climbing? So we had the bullish cross back yesterday. The opening candle right there, 9:30. Yeah. So the high probability is that the market is going to find some place, some reason up here to make this retracement. Okay. Now we expect that. Do we expect it to hold? Yes, until proven otherwise. That's the big thing. Now the rest of the world will typically just see that as, okay, it's over. It's not over till it's over. Back to the weekly, boom. We know on the monthly, it's still quite a ways off, right? Up at 2,800. So at 2,800, we're still looking at, that would be up here. So that would actually be viewing not that trend line at an angle, but really looking at the last three swing highs. 2,800, that matches up with your monthly. Okay. But with this red and falling and this red and falling, if we do pull up to hit it, guess what? On a monthly, we would expect it to be good resistance. Okay. All right, so I've tried to walk you through pretty much everything I'm looking at with my sporadic internet. Hopefully you're able to hear me okay. Apparently you are so far. And what do you think applies price blowing through all that overhead resistance at the 50%? You know, I think that's why I say we have to always embrace all possibilities. We know what the high probability thing is to happen. Was this the high probability thing? No. Sometimes the market does something different. It does the same thing every day, but it does it in a slightly different way. And this would be that slightly different way. Now, I read a few things this morning. One of them saying that, no, that does not kill the swing trade at all, because it hasn't triggered yet. And that trigger is way below us. Now, as I do some analysis over the weekend, we might raise the entry price on that swing trade, and we might not. Okay, let me reevaluate it. All right, and then Sunday night there'll be a Globex open. I'll be here, and I'll either have solid internet here or somewhere else, but the markets are going to close Monday, probably around noon. Now, a number of years ago, we came in the day after Martin Luther King Day. Now, this was before this was probably, gosh, I'm trying to think how many years ago it was. Might have been 07, maybe 08. Somebody wants to Google it up. That's when that rogue trader, the last big rogue trader, he had what, $1 billion in trades that Societe Generale did not know about. They caught it over the weekend. Now, how he hid these, it's a long story, but we came in the day after Martin Luther King Day, and the Dow opened 500 points to the downside. They had began on the Sunday night Globex. They had caught these trades, and they started trying to unwind them. It tanked the markets. Now, in hindsight, instead of the bank losing billions of dollars, if they had not began to unwind those trades Sunday night, which I'm supposing they had a fiduciary responsibility to try and do, if they'd have left it alone by the close of Tuesday or the open Wednesday, and this is all historic, so you can go back and check it, the markets were higher. The bank would have made a couple billion. Now, would the guy have still gone to jail? I don't know. Would they have ever even made it public? Or would they have just quietly fired him? Or would they have promoted him, you know, up to a higher floor in the ivory tower? I don't know. All right. Yeah, I know Michael's got things to do, and the hour has grown late as I've tried to get caught up on all this with you. So let me just run through the numbers real quick, then we'll go to Michael, and then John will be joining us, I believe. And because Dr. Tom didn't come on yesterday due to the internet issue, I still plan to try to chat with him today. We're going to talk about the 10-10-10 investment plan. Currently, the Dow cash market is up 343 points. That's 1.5%. Let me make sure those numbers are current. Yep. The NASDAQ is up 96 points. That's over 1.25%. S&P 500 is up 36 points, 1.5%. Russell 2000 is up 18 points, 1.25%. In the commodity basket, crude oil up $1.54, trading 53.59 last. Now that's a 3% gain for crude. Gold, on the other hand, down $9.80, but we're still trading 1282.50 last. We've been knocking on that door at 1300 for some time. We'll see what happens a Sunday night and for the remainder of today. In the Asian markets, Nikkei finished the session up 263 points, 1.25%. Shanghai was up 36. For the Shanghai, that's a 1.5% gain. Hang Seng closed the session up 335 points. That's a 1.25% gain. And in the European markets, FTSE closed up 133 points, 2%. The DAX closed up 286 points, 2.5%. And the CAC closed up 81 points, 1.75%. A green day in Asia, a green day in the UK, and here at home in the US of A, it is a big green radio day so far. Now, the story behind this move higher, the quote-unquote official story, the Dow jumps more than 350 points after China offers a way to eliminate U.S. trade imbalance. Okay, I don't know when that news came out, but am I on February or March? Daniel, I'm quoting oh, you're asking about crude. Okay, well, we can take a peek at crude just real quick. I want to get Michael in here because I know he's got to get out and get going. So here, we can use this. Yeah. GCLH. So bullish cross yesterday, and we've moved higher. Is that the contract that you're on, Daniel? I think that's where all the volume is now. Let's take a look. In the last 30 minutes, we've got 6,700. Okay, Daniel is. All right, great. And if we go to the last contract we were on was the GHCG. No, I'm sorry, GCLG. GCLG, and there's only 1,000 contracts traded in the last 9 minutes, so we know we definitely want to be with GCLH. In the last 9 minutes, we've had 7,000 contracts traded. Okay, and see how price moved far away from the mean. Where is it coming back to? Yep, most likely, and on declining volume. All right, so that covers the numbers. Let's go to Michael. Let's let him get in and give us a recap of what happened in the live training room today. Then I'll be back, I believe, with John in tow for a few minutes, and then Dr. Tom's going to join us at the top of the hour. Now, we're going to talk about investment grade gold today, and he's going to share with us the 10-10-10 investment plan so you get a better understanding how that works. And with gold prices climbing higher, yes, we're down a little bit today, but again, we're knocking on the door of 1,300. If we get above 1,300, I'll show you what can possibly happen from there. Let me drag Michael's chart up onto the big screen. Michael, were you able to hear me through that? All of it okay?
Oh yeah. I was listening to the whole thing. Okay,
and is the voice fading in and out? I haven't done a speed test.
No, it's actually really clear.
Okay, perfect. Then we should be able to get through the whole thing with Dr. Tom. All right, your charts are in position. I will hit mute, and I will endeavor to be here when you're done.
Okay. All right.
Oh, thanks, Robert. Okay, mute.
Okay.
And mute.
There was one question that Greg asked about us being above the highest weekly trading zone. Would I consider buying a put for 2 weeks? Not at this point, Greg. The whole option strategy that we do is based upon the time of the week that you're above the highest weekly trading zone or the lowest weekly trading zone. So right now, I wouldn't consider buying a put for right now. Okay. That was the question that was in there earlier. And Daniel, you were talking about crude. Yeah, we switched to March crude yesterday. I think it was yesterday. Okay. All right, here we go. Good afternoon, everyone. Today is the 18th day of January, 2019. 2019. Wow. Wow. That's all I can say. Okay, let me bring up this page right here. If you have not taken a free trial with us, go to the home page at CFRN.net. Over here in the right-hand column, it says 5-day free trial apply.cfrn.net. If you click on that, you will be brought to this page where all we ask for is your email, your first name, and how you found us. Hit the submit button, and you'll get this message. Right now, in this message, it just says to expect an email soon. That email that you're going to get is going to have a confirmation link in it. You must click on the confirmation link. Okay. If you don't click the confirmation link, we don't know that you took the free trial. I do that every day when I say that. You must click the confirmation link. You hear me banging my mouse. Anyway, once you do that, then we know you took the free trial, and then we can give you all the information you need. Okay, so today, if you're going to read the spreadsheet, you go to all the CFTC risk disclosures down at the bottom. Today, as I said, is the 18th day of January. We made 3 ticks in the euro, 12 ticks in crude. We lost 8 ticks in gold, and we made 4 ticks on the ES. So we're plus 108.75. 108.75. Today it took 34 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 6 trades. So on the month now, we're up $1,438. That's over 13 days, averaging $110 per day. And it's the same thing on the year. Okay. All right. Let's go take a look at what we did or didn't do today. All right. This is gold, and it was in the pre-market right here. But this is right now. Okay. This is not the pre-market. It was 933. There was an opportunity to go short. Did not put in a lower swing, so we're not trending, so we're not looking anywhere after that. Then it switched directions here, and I don't know why I don't have this highlighted, but there was an opportunity to go long right here that would have been profitable. So that would have been profitable. That would have been profitable. This one that I missed over here, profitable. This one that I took stopped me out to the tick, pretty much, and then it went down, but it didn't put in a lower swing, you see. And then we get into the break, and during the break, I wouldn't have done this bounce off the BBC here because we didn't, we're not really trending right here. Okay. And you can see that it's pretty much flattened out. And, if we get 10 more bars by the end of the day, I'd be surprised. Okay. But we had -8 over there on the gold was our end for the morning session. In the euro, this was pre-market right here, but there was a shorting opportunity right there. And then the slingshot was not letting us do anything with all this right in here. Okay. There was an opportunity right here that I missed. I think this was going into the low of the day. That's why I didn't do anything with that. Then it pulled back, and we grabbed a couple of, 3 ticks right here on that leg down. And then we had nothing. Okay. On the crude, ugh, look at this. Look at the crude. Look at the crude in the last hour and a half. It is a mess. But crude, we started out right here on crude. We picked up 2 ticks on that close down below the trend line. It almost stopped us out, but we ended up getting 2 ticks profit there. And this one here was a bounce off the BBC. We picked up 8 ticks there to give us our goal for the day. And then I went to get a glass of water, and I missed that and that and that. And, you know, that was like 2 minutes I was gone to go get a glass of water. And fortunately, you know, a bunch of the partners got their goal for the day in that span right there. Okay, and they put their mouse away because they can't. Hey, thanks for posting that, Gary. Okay, and yeah, well, there were a couple more opportunities in here, but I think it was going into the high of the day. That's why I don't have anything highlighted. We grabbed a couple more ticks over here. See, once it hit the high of the day, it got choppy, and we grabbed a couple more ticks here, and then we got into the break, and there's nothing here in the break. Nothing that is chop. You would just lose money right in there. But, you know, Joseph said he was trading the 137s this morning, and he was up $412 a contract or something like that. $410 a contract. Just doing the 137s. On the ES now, let me back it out because there's a lot of bars there. All right. On the ES, we only had one trade this morning that we took on the ES, and I don't have much highlighted here, so there mustn't have been all that much going on. It looks like right in here, there was a momentum long trade to capture that. But then again, I'm not sure that wasn't going into the high of the day. That's probably why I don't have anything highlighted. We did do this trade right here. It was a short trade, and we picked up 4 ticks there. And yeah, you see it just kept pushing the high of the day up right here. So if that was the high of the day, then all this in here was pushing in the high of the day. That's why we didn't have anything highlighted there. And that was it. Right now, it's looking like it wants to go short off the high of the day. Okay, but I'd be careful with these markets at this point. You know, we're going into holiday weekend. Paul, I'll answer your question in just a minute. Okay. All right, let me wrap up what I normally do here. Okay, and then I'll answer your question. All right, so again, if you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 3 ticks in the euro, 12 ticks in crude, lost 8 in gold, and made 4 on the ES. Put us at 108.75 per contract this morning. Today it took 34 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 6 trades this morning. On the month now, we're up $1,438. That's over 13 days, averaging $110 per day. It's the same thing on the year. I don't have to go down there and show you that. If you have not taken a free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says 5-day free trial. Apply.cfrn.net. Click on that. Okay. Or you can scroll down and click on 5-day trial down there. Or down here, proprietary indicators free. You can click on any of those. And it is going to bring you to this page where all we ask for is your email, your first name, how you found us. Hit the submit button. You're going to get this message. And you're also going to get an email with a confirmation link. Okay. Click on the confirmation link. That's when we know you took the trial. Okay. Click that confirmation link. And then you'll be sent all the information you need to get into the free trial. Okay. Okay. Now, Paul, the brown line and the slingshot to do the 137s. You do need the brown line to do the 137s. All you need down there is the green line and the brown line to do 137s. I don't have the brown line in here because I don't do 137s in the room in the morning. Okay, and this is a review of what was done in the room. That's why I don't have the brown line down there. Okay, and Gary posted a copy. Here, I'll put it in for
of the drawing trend lines with Bert. That's a
drawing trend lines with Bert. It is. And Bert will go through, and Bert did go through everything about drawing trend lines at that point.
Yeah, it's okay. A really good, really good video for someone new, and even someone who's been drawing them for years. Just someone else's perspective on it. So he did a great job. Oh, and by the way, I'm sure that most of you have heard that Bob Costas, after many years, is leaving CBS Sports. The good news is he will be replaced by Michael and Bert. I heard them both this morning working out their new spiel. They were talking basketball. They did a great job. They're not Bob Costas yet, but I'm sure someday they will be. So congratulations to both of you.
Yeah, thank you. Thank you.
It was a very interesting conversation that you guys had. So those of you, it's sort of an inside joke. Those of you that are in the live training room this morning, you heard it live. I want to meet this Peanut, though. Will you guys be interviewing her on the first show on CBS? Is that how that's going to work?
I'll have to show you a picture of her. When we went to the beach last year, she is. I mean, she's an incredible athlete, and she's small. She's little, but she is an incredible athlete.
Out of how many total points yesterday? She scored how many?
Out of 34, she scored 26.
Yeah. How does that make the other girls feel?
They all know. Everybody knows. Everybody knows. You know. Sophie is just she's a force to be dealt with, and you know she'll be there at the game today, this afternoon, but tomorrow she's not going to be there because she's got some camp she's going to, and then they're going to feel it tomorrow. You know, the score will be like 12-6 or something like that.
Now, you know, kind of off topic for just a second, and I'm not saying that this, I'm not speaking about this girl. I'm just speaking about, I watched this debate on TV the other day. You know, the whole transgender athlete thing has become sort of a big thing, and they showed a race in some high school race somewhere. There were two boys who decided that, you know, they were somehow got messed up at birth. And so in high school, they're running in this track race where there's a couple of Olympic hopefuls on this track team. And that would be the girls, and they lost, but the other athletes, and I'm not passing any kind of judgments here, and I'm not trying to go political. I'm just, this is, you know, if it's happening at that high school, it's probably happening at my son's high school. She hasn't mentioned anything about it, but he's the fastest runner at the school anyway, so anyhow, they had the mother of the girl that lost the race, who was she was an Olympic hopeful until she lost this race. And so they interviewed her mother, and her mother was pretty ticked off. And I don't know what other people's thoughts are, but we know that, you know, just pure physiology, that the male has more core strength, can typically run faster. Now, I'm sure that every girl on that team could beat me running. I don't know about you, but I get winded just walking to the mailbox. So
walking,
yeah,
walking to the mailbox.
So,
is it uphill?
There are no hills here. Well, South Mountain's got some hills, but I used to walk those hills. We used to hike up that thing all the time with Gabe when he was like 5 and 6. But so, you know, what they interviewed this very smart lady professor who also happens to be transgender, and she even said that those boys who won that race have not been through the hormone therapy. Supposedly with the hormone therapy, it takes away their speed and their strength, so it puts them on like a level playing field, you know, with the ladies. And even that, I don't know, it just seems a little unfair. I don't know. Have you ever encountered that? Have any thoughts about it? Did you maybe see the
hormone therapy?
Well, about the whole transgender thing. Paul's.
Yeah, I have a lot of experience with that, sadly, and I'm fighting it in court right now.
Really?
Yeah.
Oh, I did not know that. Okay.
Yeah.
Ridiculous, Paul says. Paul M. Ridiculous, men have more testosterone. Yeah, and that's what the hormone therapy does. Is it tells the testosterone to shoo. Get out of here. Paul also says women can't compete with men in any sport because men. Yeah, well, Paul, but in high schools they are allowing it, and it's going to have to be decided. I don't know who will set these rules. I don't know if it'll be done through Congress, if it will be done just on a local level at different schools, but it's an issue, and it's becoming more and more of an issue as it becomes more commonplace. And there was some film crew that just pulled out of North Carolina because North Carolina refuses to have the bathroom law that some other states have. Are you familiar with that?
The North Carolina law?
Yeah, like North Carolina says, you know, if it says male on your birth certificate, you got to go to the boys' bathroom. And if it says girl on your birth certificate, you got to go to the girls' bathroom. But there are schools across America, different states, I guess, cities, where they've changed that. And so I don't know who there's a lot of filming that goes on in North Carolina because it's a beautiful terrain and varied and just a lot of reasons. In fact, that one show, Highlander, right now they're pretending to be in North Carolina, but they're actually filming it, I think, in Scotland, where there's parts of it that look just like North Carolina. That's a great show, I think, if anyone has an interest in time, but it's not time travel in the typical sense. So it's different. You watch a couple episodes. If it's not for you, you know, shake it off. Yeah, Paul, it is. It is quite a situation. But you know, that sort of thing does not seem to faze the kids today because they've kind of been just. It's how they've grown up. We were watching a show the other night, and this is a great show. Anyone who hasn't seen it, National Geographic has a new series called Valley of the Boom. And it starts back in 1994 when the internet was quote unquote invented. It had been around, it was ARPANET before that. But all of the major players, some of the names you'll know, like Mark Andreessen. Did you know Mark Andreessen was the brains behind the original Netscape Navigator? You've heard that because Mark Andreessen now is a venture capital guy. Yeah, I did not know that. He was like a young kid, and at Netscape he was like the god. I mean, he really is the one that created the Netscape Navigator, and this was before there was really any browsers per se out there. I was on the internet when it was just bulletin boards and universities, and it was very complicated to use the internet back then. You could still get information, you could still, you know, download data and all that, but it wasn't this visual graphic experience, GUI they call it, graphical user interface, like we're all accustomed to. And I thought my son and daughter would both be very fascinated by the history of this, but guess what? They're really not. Because they didn't live through it, and ever since they've been born, there's been internet. Since they were old enough to get their hands on a computer or whatever. You follow me? It's a thing for me, because I grew up with no internet, no smartphones, and then I saw the world change. And I knew it was changing. The first episode is called Print Hello World. There's only 2 episodes, but the third one comes out this Sunday night at 9 p.m. Eastern. And I remember sitting in my home office back in, oh gosh, 86, 87, kind of before the internet, but I had a Commodore VIC-20, and then at some point I think I had one of the original Macintoshes. And I went through that, you know, remember the Hello World? That's like the first thing you're taught in programming is how to make the computer print Hello World. And I did that a few times, and I'm like, wow, this is complicated and stupid. This will never catch on. So guys, when I tell you that I don't know what's going to happen next, trust me, I missed it. I missed the internet until, you know, it was already there. First time I looked at Facebook, or the first time I looked at Twitter, I'm like, who in the world is going to waste their time on this? Apparently millions and millions of people. And then the same thing with, I said it about Facebook. And now look.
I know, when I was in school, you know, in computer science school, I had a friend that was in my class that had created the equivalent of Facebook just for the, you know, for the faculty, so that they could put their stuff out there and their students could get in touch with them and stuff like that. He had created the exact equivalent of Facebook, and I'm sure it probably never went anywhere. he created it for the school. Yeah.
Huh. Interesting.
And
Very
he created
nice.
on a Vax. And that was that was a long time ago. Gosh.
Well,
Anyway, John's
well,
out there in the audience. If you
Oh,
want to
okay. Yeah, let's open up his mic so we can talk to him because Tom will be popping in here
Yep.
any second.
Okay, John's mic is open.
Hey, John. Welcome to the show. Sorry to keep you waiting.
No, that's okay. Yeah, I did know that Mark Andreessen was the founder or co-founder of Netscape.
Yeah, and I've heard you say in the past that what happened with Netscape Navigator was one of the biggest travesties you ever saw. And I don't know if you're familiar with the show I'm talking about. Only 2 episodes have been published yet. It's on the National Geographic Channel. It's called Valley of the Boom, and it is done in a very entertaining and enlightening way where they go back and forth between actors pretending to be these people and then showing actual film clips from back in the day. Like that classic on the Today Show, when the one guy, I can't remember his name, is it Brian something? When they go, what is the internet?
Oh yeah.
Remember
I know
that?
Yeah.
It's great. So you can get on demand right now the first 2 episodes, and I highly recommend it. It's good.
Bryant Gumbel, that's the name.
Yeah, Bryant Gumbel. He was talking about the @ sign, and how do you say that? I mean, what does it even mean? When I say Brian so-and-so at NBC, that just sounds stupid.
Listen, we're just reversing back to a buy here after a short sell on this pullback.
Testing.
We got it.
Hey, Dr. Tom, we got you. John just came on, and I'm going to be right over to you here in just a couple minutes. So hang with us, and we'll have you join the discussion. Okay?
Okay, great.
All right. Go ahead, John.
Yeah, I think it's fair to say, as we've already commentated quite a bit, that there's a worldwide federal banking, central banking effort to get these markets back on track, and they've done a pretty incredible job so far for late December and January, and we are. Let's have a look at this. If this rally continues into the end of January, and we could be, let me just pull this up. Hang on a second. Yeah, we've got a ways to go. I mean, we'd have to get up to 2,800 on the S&P to really do a a huge kind of reversal here. A full reversal, if you like. But I think I did say a week or 2 ago that there was a monumental buy signal under this market, something like we've never seen before. And we're seeing and look, who knew that the Chinese were going to come in with this massive stimulus that's really helping everything move along. And I think Draghi is probably, I think Draghi went to work for sure sometime yesterday in a big way, because the European markets are up dramatically. The DAX
What
is up
happened at 2:30 Eastern yesterday? Is that when the Trump letter hit telling Pelosi she needed to?
Yeah, it was a you know what? It was a combination of things. I forget there was a key. Look, I think the beige book came out, and there was a couple of other things. There was
the beige book was that yesterday?
I saw a report on
Wednesday, if memory
might have
serves.
been, but it might have taken a day to kick in. There was 2 or 3 things that hit yesterday afternoon that were kind of bullish. That
we had a
synchronized.
23-point candle, a 23-point 30-minute candle at 2:30 yesterday on the S&P. That's a day's range in normal markets, right there.
Yeah, it was a big deal for sure. And this morning we got so there was that, where we went up to the highs and then we broke out overnight. Then we had another spike this morning, and we sold that spike. Didn't quite get the top because I was out of the office for a minute, but I got the dip on it, and we've been basically long right up until here. So we might run into a bit of a look. I'd say there'd probably be a pullback in the next hour or 2, the way the thing is happening here, and then we may get a rally into the close. But not all is going great today. Netflix is down and Tesla is down dramatically. Tesla was at 350, probably a couple of weeks ago, and it's down to 311 today. So it's really been taken apart. I don't think it bodes too well for the near-term future in Tesla. I think they're starting to. First of all, they've got an inventory problem. I think they've got too much product. They may have satisfied most of the orders that were done with the deposits, and so they're running out of new customers, at the rate that they had them before. Then they've got BMW and all these other competitors starting to get their act together, electrically speaking, and there's going to be more and more choice electric-wise over the next year or two. So Tesla's in a bit of a spot here. It's not down to 311 or 310 by accident. There's obviously something's up there that's not very good to be going down that badly on a day when the Dow's up nearly 400. It's not a good performance, So
the scandal yesterday.
It is a kind of a look. The way it looks to me, Dwayne, this is such a monumental rebound that it's hard to see us coming down and retesting the lows. But I wouldn't rule it out, and I wouldn't rule out going to new lows, even in sometime in the next 3 or 4 months. But I'm sure people are fund managers are looking at Tesla and they're looking at this market and saying, we got a pretty good gain here. Let's lock it in before the weekend. The political news is not very good. There's all this, impasse going on. Obviously, if they can work out a deal, that would be very bullish for the market. And, stranger things have happened on a long weekend. They could come up with a compromise. That would obviously be a higher Tuesday. Assuming we go out near the highs today, given how strong Europe is, I'd say, remember, we're going to be closed on Monday when Europe is open. So Europe could easily go higher, 1% or 2% higher here off this incredible upside performance, and therefore we could come in a lot higher on Tuesday still. And look, Asia is up dramatically. The Chinese markets Chinese put in, we called the bottom quite a while ago, and it's a really good bottom. It's a double bottom, and we've been rallying very, very strongly off it. And the other thing is, we're going over the 50-day moving average in a lot of stocks today or yesterday, and we're we're starting to break downtrend lines. So it's sort of, and look, from my perspective, I think if you look at the way we came off the bottoms, we did have we had one of those overwhelming bullish candle reversals, on the big bottoming day, and it came. Remember, that was the day we had the -2% sentiment, or so. All of the ducks were lined up. We had a little bit of a pullback. If you notice, I'm trying to say it looks like we're in an impulse wave to the upside. In other words, the correction is over. If you look at that chart, you'll see it's a kind of a three-wave correction.
Which one, John? Which
the
chart?
one you've got up right now.
Daily? Okay.
Going back to the highs in October, right? And you got the ABC was a sort of a zigzag deal, right? And then we had the very severe C wave. So we had a sharp A wave, we had a volatile B wave, and a sharp C wave. And now we've put in, I said it was sort of like a microcosm of from 2000 down to 2002, the rally and thing, except the B wave didn't go to a new high on this. It's a straight ABC correction. But if you look at this huge overwhelming reversal here, and then we have a kind of a 1-2 wave, and we're in some sort of a third wave here of sorts, of a wave one, of a possible wave one, which could take us all the way up to here, and then at some point we're probably going to go in. Then we might have another pullback. Which could even go all the way down, or it could pull back anywhere in this sort of mid-range from where we come from, 2,500, possibly holding.
Right.
And then after that, I think you could have a huge up wave and a third wave that would take us up towards 3,000 on the S&P, maybe even 3,100. So, you know, we might run into trouble where you've got that trend line circled, right? 2720. Could back off from that and find another area of support from which to launch another impulse.
Yeah, well, also overhead, you noticed these three highs here. That puts us up in the 2800 area. You know, if because we had a high, a lower high, and then another lower high. If we get back up into that area at 2800 on a monthly chart, that puts us right here where we would expect resistance, as long as this stays red at 2802.
Yep.
So the question becomes, is this the spot on the weekly? You see how we've pulled back here, and we would expect good resistance here. If we fly through that, then we come up here and we can see where that resistance is there. But here,
I mean, we could actually gap through it. You know, right now we're pulling back, you know, we got to be careful of this pullback because Tesla could drag the rest of the market down, and people might just, you know, decide to go flat over the weekend. But I still think, in line with what you're saying, and given that's, you know, we're up 340 still on the Dow, that you could still gap higher on Tuesday, but we may run into some turbulence next week. Now there is, as I mentioned yesterday on the show, there is, you know, when you get into the 20 to 26 or 7 of January, generally there's there's generally a positive kind of cyclical tendencies during the next week. So it could, you know, we could actually go all the way to 28. Wouldn't rule it out. But
well, we got an interesting dynamic this weekend, John, because Globex will open Sunday night when we have the Blood Wolf Moon.
Oh yeah, that's another thing.
But then Monday the markets are closed. You know, for Martin Luther King Day. Now they'll trade. Globex will trade up until about noon on Monday, but it'll be a holiday market, quote unquote. Stocks will be closed, and then at noon they'll close. But then at 6 p.m. Eastern, they'll reopen for the Tuesday session. And I was talking about that rogue trader years ago. We came in the day after Martin Luther King Day, and the Dow opened over 500 points to the downside because Societe Generale had been trying to unwind what he did on Globex over Sunday night and the Martin Luther King. And so they ended up losing $1 billion on that or more. If they'd have left it alone, historically looking back at it, which is a perfect science, if they'd have just left those trades alone that they uncovered over the weekend, instead of losing $1 billion, they would have probably made a couple billion because the market ripped higher later in the week. So.
Yeah, exactly. And remember, last year we topped out, you know, in the waning days of January, but we still were very strong in the lead up to the 26th of January last year. So you know, I think that the way that we're looking right now, the odds are fairly strong, fairly high, that we're going to finish January either around here or higher. And given that the market tanked last year, sometimes the following year goes the opposite. So we could actually be looking at an up February, maybe even an up March. Remember, this is a kickoff a lot like 87, and you know, the 87 had an incredible first quarter. Then had a double 10%er, followed by a 30%er to the upside. So you have to kind of keep in mind that we're certainly going to have a lot of continued volatility, I think. But given the way Facebook is acting, and Google and Amazon and all these, you know, they've all been acting very well here, you know, in terms of the rebound. You know, before any news came out on their earnings, except for Netflix. So Netflix opening down is not a particularly good omen for the rest of the tech sector.
Well, they missed their earnings. They missed their earnings guidance slightly. And I said earlier in the week when they raised prices, I go, I wonder if they're going to miss earnings, and they know it, and so they're trying to comfort people by saying,
ameliorated. Yeah, we talked about it yesterday, and the big surprise came in. So, but it didn't really. Interesting enough, it didn't really hurt. The market rallied last night. It just ignored Netflix, and it's ignored Netflix and
it's ignoring
the Tesla
everything
today. Yeah. So at least it's starting to take note now, which is the point. Now, obviously, if we did turn down today, I mean, God forsake, if we went negative, it would be diabolical. But stranger things that happen. But right? Certainly, if we don't close near the highs today, it tends to suggest that we might be running into resistance up here. We might do a little retest next week, and if we're unable to get above it, then we might be in for a correction of sorts. If we do get a pullback next week in a kind of a bullish cycle, and then we flip up into the end of January, that's okay. The most important thing is, as reversals go, this is definitely the January reversal is one of the most dramatic reversals in history period. And that's and this huge stimulus that came out of China, whatever Draghi's doing, what the Fed is doing, what the Japanese are doing, it's a worldwide not bailout, but it's a worldwide stimulus that's going on here.
In less than the past 30 days, the S&P's up over 400 points. Am I doing the math right here? No, 320 to 720. Yeah, that's 400 points. Well, we aren't quite to 720 yet, so we'll just wait and see what happens. But we're closing in on 400 points. That's when's the last time we rallied 400 points in the S&P in less than 30 days?
I don't think it's ever happened before. It's a really big deal. It's pretty close to a record, I think.
Interesting. And this anticipated resistance here on the move up at the 50% reverse fib, and these lows, which should have provided some resistance, the market just shrugged it off and kept moving higher. It's got an agenda. It's on a mission, and again, historically, when we look back at it, we'll be able to go, yeah, okay, so that's why it did it. Yeah. Time will tell.
Well, it is. Look, the higher we go into the end of January, in many respects, the stronger the market's going to be. And since this is one of the biggest reversal months in history, and it looks to me like it's an impulse wave developing. I think that the outlook actually for the rest of the year is very, very positive. However, I think we're going to have a retest of some degree at some point. When this rally ends, there will be a pullback that will be it certainly be as big a pullback as we've had. Not the pullbacks we've had in this market have not been too dramatic. They've been 1,500 Dow points, 1,000 Dow points, 500 Dow points. We're gonna have something like that. Maybe a couple of hundred points in the S&P, or maybe 150, or so we'll see what happens. But beyond that, we could be looking at something much more powerful if given the employment numbers of the economy. Now, there's another thing. We talked about this a while ago. Neil Kashkiri has got this idea about doing this 5 trillion line of credit and sort of monetizing the debt. And, he may be making progress of sowing the seeds of that idea with the Fed. And if the Fed were to adopt that, it would be, the economy could potentially grow 5%, 6%, 7%, which would be incredible. But it would have an inflationary component to it that would probably send gold prices dramatically higher. Did we talk about Sam Zell yesterday? Or no, I don't think that news came out when it was on the show. We talked about gold. We talked about Goldman Sachs raising the target to 1425. Right. We've talked about this billionaire out of Egypt he's worth $5 billion. He's got $3 billion in gold. We've got Jeffrey Gundlach looking for 2,400, and the gold has been acting really well until yesterday. Now, sometimes when news like Sam Zell buying gold came out, it's sort of like the markets buy the rumor, sell the fact. Sometimes when these big people come out with big statements, the market backs off a bit and then it goes for real. So I'd be looking at this pullback in gold as an opportunity to probably get long, maybe next week or possibly even over the weekend. But the news is that Sam Zell, who is by some people's estimates the smartest investor that ever lived, he was the biggest corporate office equity holder in the world back in 2007, and he sold out everything right at the top. The whole sold $40 billion worth of real estate right at the top. And he came out in an interview yesterday, I think on Bloomberg, and said he's buying gold for the first time in his life. Now, believe me, he's not buying gold for a 10% gain. He's buying gold for a very bad outcome sometime down the road. Calls it a good hedge, considering that he's had the opportunity in his lifetime to buy gold at probably as low as $20, and for a long time around $35, and he's buying it at $1,300 right now. It speaks volumes about where gold could go in the future. And I wouldn't, this kind of news coming out is going to make most portfolios managers say, I'm all in with Zell. I'm going in with Zell. Now, they're not going to do that overnight, but they're gradually, if the market starts running up to 1,350, 1,400, and so on, it's obviously going to draw in a huge amount of money. And I just was on a call this morning and with people who are in China, and apparently there's a tremendous amount of demand starting to develop in China. The yuan is, had a correction of 10%. I think if the yuan were to break down any further, it would create a tidal wave of gold buying, the likes of which we've never seen, because the yuan, you have to look at it from the Chinese perspective. The yuan to them is like the dollar to Americans. They think the almighty dollar can never get into trouble, and it has been through some trouble in its life, or as we all know. It started a 7-year down cycle. It's had it's been interrupted by an unusually strong rally off the first break. But if this rally were to peter out, which could happen in the next few months, I think the next downside leg in the dollar would be very substantial. Obviously, it would be helpful to markets, but it probably would drag the yuan down with it. And the yuan, the Chinese authorities may choose to devalue the yuan to make Chinese goods more competitive against less tariffs. So and I think if the yuan starts breaking down to new lows, approaching levels of last decade, that is when the Chinese are going to really, you've got so many people over there. And remember, there's more billionaires in China now than there are in the U.S. And they're minting. There's more millionaires in China than there are in the U.S. I think it's so you've got a tremendous amount of money that could. Talk about my long-term scenario. It's pretty simple. Back in 1976, I believe that the $35 to $200 rally that we had from the mid-60s to 1974 is reminiscent of gold going from 250 to 1900 over the 10-11 year period. Okay, instead of having a 2-year correction being cut in half, it had a less dramatic correction in terms of price, but an elongated correction in terms of time that bottomed in 2016, which is, on my timeline, is the same as 1976. So as you know, a lot of things today, look, the Dow today is 10 times more valuable than it was in 1987 or 1989. So many years later, we're 10 times the value in the S&P and the Dow and everything else. It's the same with gold. In 1976, we bottomed at 104.60. Believe it or not, and 2016 or 2015-16 bottom was 1046, exactly 10 times higher. And I believe we're in an up leg, a 7-year up leg right now to a potential peak, reminiscent of what happened in 1980 at 875. So you could argue that, you know, extrapolating out the potential for the goal to go to 8,750 is not unrealistic based on what happened before. And given that the world in many ways is in much more dire straits today with trillion, you know, 260 trillion in debt or some number you can't even calculate. And think about this. The Fed, you know, in the I remind people that the history of what happened last century in many respects is being repeated this century. It's a different era. In 1875 we had the start of the Industrial Revolution, which took us all the way to 1930. This time we're in the technological revolution that started in 1975 and could take us all the way to 2030. Now, there were a couple of, there were similar interruptions. We had a 1907 crash versus a 2009 crash. Then we had a big rally into the teens, you know, at the end of World War I, going into the 20s. But the interesting thing is that the rally in the 20th century was defined as a disinflationary period and a relatively low inflation period like we're in. But the inflation started hitting in the early 20s, and that caused the Dow to crash back to its 2007 bottom. And I think, and we did have a Fed, remember by then, the Fed intervened and got things revved up again, just as I believe they will do the next time we have a real crisis where, you know, I'm not saying we go back to the 2009 levels at 6,600 or thereabouts, but would not be unrealistic under extreme circumstances for the Dow to crash back to 10,000, possibly even 8. So you get a point where gold hits 8,000 and the Dow hits around 8,000. You have a 1-to-1 ratio. It's happened twice before, and it happens every sort of 40, 50 years or so. So you have to keep
let's get Dr. Tom's perspective on this. What do you think, Dr. Tom? Are you there, Dr. Tom?
Okay. Yes, sorry, I was muted.
Okay. Yeah, what's your take on all this?
I was actually going to throw a little monkey wrench into the works here.
Okay.
And ask you all what you think about, you know, we always talk about how what Trump is doing is going to affect the markets. But what do you think about what's happening with Brexit right now and how it might affect things?
Well, that's a very good question, Tom. I think we're seeing the beginning of it a little bit. Look, the pound made a crash low a couple of days ago on that vote. Then it turned around and put in a pretty good bottom. But the currency, you know, the euro, for whatever reason, the euro and the Swiss have not been underperforming. However, the Australian and Canadian have been doing quite well. One would expect that to happen in an unfolding resource, in an improving resource kind of an outlook. Unfortunately, the dollar's gotten back over 96 today, which is a bit of a problem because it's putting pressure on these currencies going into this weekend. I think that, you know, if the Remain people are getting the upper hand and they're delaying the Brexit and everything, and if they do have a referendum or if there's a change in the political scene, which is quite possible, you could see the pound do some extraordinary things. Like it could jump 10 cents in a matter of days, suddenly be up to 40, 140 or 50. I think that would lift all the currencies, the European currencies and all the currencies very sharply. It'd probably push the dollar down, and under those circumstances you could get a pretty big rise in gold. So but you know, the gold, interestingly enough, the gold's been going up even if the dollar, even as the dollar has been rising. That's the best of all worlds when that happens. And in doing so, I might add, it has created an unprecedented situation this actual week when 72 of the world's currencies all made new all-time record highs in gold, which is unprecedented. So. Yeah. But what that tells you is, the dollar, anybody who's got half a brain knows that sooner or later this dollar is going to run into trouble. Nobody knows exactly when, but when it does, you're going to see asset prices go through the roof, especially gold and silver. And, that could happen at any time. We could come in on Tuesday morning and, the pound could be at 131 or 132. It just depends on what happens in the next few days. And it also depends if Boris Johnson gets, elected as Prime Minister. That could be a little bit detrimental to the pound because he's a Brexiter, but I think he's a Brexiter under the right kind of deal for the UK. But you never know how things could play out. I mean, look, there's a lot of powerful forces in England now who don't want the Brexit to happen. If you take the city of London, they're like 80 or 90% Remain. Scotland, Wales, Northern Ireland, they're all Remainers. So really, there's only parts of Britain that want to leave. And if they had a referendum again, if a second referendum happens, the odds of the pound rallying back to 150 are very, very high, because that's where we were before the last shock happened, when with the Brexit. That's when the pound tanked. So, if there was a Remain, another vote, and the pound went up to 140, 150, a lot of Brits might say, thank you, I'll take the pound. I don't want to go through our currency and our national net worth going down the tubes again by leaving Europe. And that could be a game changer.
Tom, what do you think will happen with how do you think Brexit will affect it?
I'm looking at the political side of things. The big vote that went against Theresa May, excuse me, she had two forces working against her. People who were stay voted against the deal, and people who were leave voted against the deal. The ones that wanted to leave didn't think that it was a good enough deal, and that she should negotiate something stronger with Europe. And of course, Europe's called the position they're not going to change anything. They've negotiated. This is the deal. That's that. So you got people that really want to get out, but feel that there should be a stronger deal. So they voted against it. And then, of course, the people that wanted to stay voted against it. So the vote was like 2-1. But then she survives the no confidence vote by a pretty good margin. So personally, I think it's better for England to get out of the European Union. They were one of the few, I think, 4 nations that are part of the European Union that are not part of the Eurozone. They never gave up their currency. So it's a lot easier for them to get out than the other people, like the Germans and the French, that gave up their currencies and basically gave up their sovereignty, because if you don't have control of your money, you don't have sovereignty. So England maintained a large degree of sovereignty by keeping the pound. It's a lot easier for them to get out. If they end up staying in, they're going to be pressured now, because they'll be in a weaker position to give up the pound and get into the euro, which I think would be very bad for England's economy. So I think her Britain, obviously England is only part of it.
You've mentioned, Dr. Tom, a number of times on the show that currently most of the investment grade gold that you and your clients purchase comes from England or the UK, correct? From Europe.
That's correct.
And how would any of this affect that in any way?
I think tangentially it could. You know, basically, the money today has no relationship to the money, the medieval and ancient coins.
Sure, right.
That make some people so much money today. But just the fact that England took back control of its own sovereignty, they stopped having Brussels passing, you know, 80% of their laws are coming out of Brussels, not out of their own parliament. I think that could create more interest in British coins and drive them up farther. And then there's some other reasons. Australia did something about 4 years ago where they opened up their equivalent of the IRA to collectibles, particularly rare coins. And as a result, the value of the rare coins doubled because just supply and demand. People had money sitting in their accounts in stocks that they didn't want, or they were allowed, like we are here, to hold bullion in their accounts, but they would rather have, you know, bullion basically protects you against inflation, but it's not really a good investment, especially for long term, whereas the rare coins tend to make 7 to 8 times as much as bullion. So people just quickly move to get rid of their bullion, put the money into rare coins. Well, England has been talking about this for several years now for their retirement accounts because Europe in general is much more into collectibles than the United States. And, you know, where we have trust departments in banks, they actually have rare coin departments in banks over there.
Really? I didn't know that.
Yeah, it's very interesting. I mean, whole departments with dozens of people that buy high-value coins up into the millions of dollars for their wealthy customers. So if that were to happen, if people were able to take their largest pool of cash, which is typically in their retirement account, and move it into rare coins, then they would, I'm not going to say they're going to double like they would in Australia, because the coin market is a lot bigger in England, but it could easily bump British coins up 50-70%.
Interesting. Interesting. And how imminent is that?
It's been debated and through committees and so on in the Parliament. There is no vote up right now for that. But at first it was sort of dead in the water when people started talking about it. But then when Australia passed it and it was successful and beneficial for the retirement accounts, the value of the retirement accounts started going up. Then England got more serious about it. So I give it a probably 75-25 chance of passing.
Interesting.
Which would make me happy because I've got 70% of my net worth in rare coins.
Right, but wouldn't that cause less rare coins to leave?
It would. It would be harder for us to get rare coins,
okay,
because they'd be moving into the retirement accounts. But that's just going to cause the prices to go higher. Supply and demand.
Interesting.
So it would not make me feel sad at all.
All right. Well, I know we're going to get into this 10-10-10 discussion here. John, anything else you want to cover today? A lot going on.
Well, yeah, there is a lot going on. The other thing is the oil rebounded pretty dramatically, and the products they're up pretty much close to the highs again, up around 53, 54 almost on the crude. And you know, that's another. And so it's going to look, if the gold, I would say, gold gets back over, I'm using the April now, if we get back over 1290,
1290?
1290 in the low 1290s. That would be the first good sign.
Yeah.
Silver getting back about 15.5, and then if we get over 1300, I think you're going to see a significant up leg. I think the next up leg in gold, when it comes, will be a big one. You know, sizable.
1350.
Yeah, I'd say so. 13. I'd say upwards of that.
Gotcha.
You know, it could even go more. You know, there could be a reason for it to go more. So that's the crude you've got there. That's making a nice kind of head and shoulders bottom. Look at that.
Yeah, you know, it is. And
crude often performs very well in the second quarter of the year.
Yeah, so getting back above 56 obviously is a big deal. Getting back above, getting above 60 really opens the door to 68. I mean, there's just not much to get in the way there. And so
all of this would be supportive to gold as well. So, and also, if you recall, I mentioned the grains yesterday before they took off, that we were long from near the lows, and the grains had a very strong day, 2 days so far. I think in anticipation of buying out of China, and the fact that they came out of a pretty desperate looking chart to they suddenly, because remember the day before we were looking at it and saying looks pretty grim, and then all of a sudden bang, you know, we've recouped a lot of what we lost in the last few weeks in the grains in a very quick manner.
yeah,
in fact, we've actually exceeded. You know, we're back. We're almost on the soybean oil. We're almost at new multi-month highs, and on the beans, you know, boy, if these beans gap higher from here, they could really run up towards 1,000. And the only one is the meal is acting a little bit subdued right now, so that's not such a good sign just yet. And the wheat is also the corn is looking quite bullish, and the oats, but the wheat needs to clear the 525 area to get some traction.
Okay. All right.
Okie doke.
Well, thanks, John. We won't be here Monday because of the holiday, but we will be open on Globex Sunday night. I mean, we won't be broadcast. I'll be broadcasting in Telegram on the channel, but we won't have a radio show Monday or a live training room. But we will be back Tuesday, full schedule.
Okay.
All right.
We'll see you Tuesday. All the best.
Have a great weekend. Enjoy the holiday.
You too.
Get
Bye
some
bye.
rest.
Bye bye, Tom. Bye.
Okay.
Goodbye.
Hey, Tom, you still got time to talk about the 10-10-10? I know we're
I think I do.
late getting rolling here, so I had told everyone that that's what we were going to do. Do you have some slides that you want to show? Do you want me to pass that over to you?
Yeah, that'd be great.
Okay, let me do that. It will take just a second. Okay, you should have a pop-up.
I do. All right, you should be seeing my screen.
The Revital Principles. I see.
Okay.
Okay, you've got it's the middle, the screen. Is there any way to open up? Because it's kind of cutting off. I can see the FINA and then education series. It's like if I could stretch it out. Can I? No, I can't on my side. It's just sort of running off the... It's like I've got a strip in the middle of the screen. And I mean, everything looks great. It just, the right side of it gets cut off.
I wish I could see what you're seeing.
Oh, I think you can. Do you have on your control panel for Go-To up at the top? Where is that? Somewhere it says show.
Dwayne, it looks like it needs. He might be able to go to a full screen there. See the little square up above in the right top right-hand corner?
Yeah, try that, Dr. Tom.
Okay, let me do that. All right, and then now I'll F5 it. How is that?
That is perfect. Hey, John, that was it. Thank you so much.
You're welcome.
You know what it was, John? Thank you. I had 2 screens side by side, and I thought when I went full screen, it would just automatically take up the whole thing, but it didn't. So I appreciate that.
You're welcome. Thanks.
All right. Have a good weekend.
You too. Thanks, Tom.
All right. Let us commence with the commencement here.
Okay. Now, this is something that you've talked about since the first...
The wise owl?
No, that's Dr. Tom. But thank you. That was kind of you to say. You know, Tom, you've talked about this 10-10-10 since you first came on the show, but I don't think we've ever done a full-blown, slideshow, and you really, got into talking about it. So I'm very interested for the audience, on behalf of the audience, for them to be able to hear this.
Yeah, I realized that was the case, and I think you find it. By the way, that owl there, that's actually a photograph of me when I was younger.
Okay, fair enough.
Okay, this is something that I've taught on Christian Financial Concepts. You see across the bottom there, ChristianFinancialConcepts.com. We do webinars every Monday night, and they're on various different aspects of finance, and I think people would find it interesting, so everyone's invited. Okay, so we actually called it the 10-10-10 Financial Survival Plan originally, but we've changed it to strategy. And let me go back up here. Let me just cover these 3 vital principles, because if you understand these 3, then you know how to invest in gold. Number 1, wealth is never destroyed. There's no such thing as destroying wealth.
So when we hear that the stock market in Hong Kong the other night lost $3 billion, it really wasn't lost, it was transferred.
Somebody else got it.
Okay.
Yep.
Okay.
Another principle that I go by very strongly, if you can't hold it, you don't own it. If you have, for instance, if you have gold in a vault somewhere in Perth, Australia, or you've got gold certificates or whatever.
Or just a warehouse receipt. That's the most ridiculous thing I've ever heard of. That's even more ridiculous, I think, than the ETFs, but go ahead.
Yeah, and the ETFs, I could talk about that.
Oh, boy. It says right in the prospectus, they don't have to buy any gold with your money.
I know. It's artfully contrived derivatives.
And it depresses the price of real gold.
Sure.
I'm sorry, go ahead.
It's fake gold.
It is. And it aggravates me to no end.
But remember this really important principle. No paper money in the world has ever survived. Ever. The lifespan of the average paper fiat money has been 35 years.
Really?
Unless it's backed by gold. That's right. Now, ours has lasted longer because we have a thing that nobody else has, which is our status as the world reserve currency.
Mm-hmm.
But remember, nobody gave us that status. We just got it by default as more and more central banks started holding the majority of their assets in dollars. That made us the world reserve currency.
Now, I had a vague understanding somehow that Nixon played a role in that, orchestrating it. Am I way off there?
Actually, Nixon was on the backside of it in a way.
Okay.
First of all, we went off the gold standard in 1933 when Americans were no longer able to redeem their $20 gold certificate bills for a $20 1-ounce gold coin. Okay, so people say, "Oh, we were still in the gold standard until Nixon." No, that's not really true, because if I, as an American, can't redeem my own money for gold, we're not on the gold standard. Now, other countries could, particularly Germany and France, and then towards the last of it, France mainly was just depleting our gold, sucking it out, because the official price of gold in the United States was lower than the market price of gold. And so there's a lot of people that feel like we don't really have any gold left at Fort Knox. They haven't allowed any inspections there for 3 decades. So it wouldn't surprise me. I'm not a conspiracy theorist, but I mean, we know that Nixon had to close the gold window, or we would have had no gold, period.
Right.
Because these other countries were taking it away from us by law. So the thing that allowed them to do that was an agreement called the Bretton Woods Accords, and that happened in Bretton Woods, Connecticut in 1944. And there were about 40 nations there that came together and did a treaty, and out of that came 2 really important institutions, the IMF, the International Monetary Fund, and the World Bank. But they were basically U.S. institutions, because out of the 40-some nations, we were contributing, just like we do to the UN, over 50% of all the cost.
Right.
So we were the big dogs. We were running them. The problem was, it was at that point that we became the de facto world reserve currency, because we had all the gold. Remember, during the war, we didn't get in to the Second World War till several years in, and so everybody was buying munitions and armament from us. Well, we were not going to take their paper money because we didn't know if they were going to be around. I mean, it could have gone the other way, and England could be speaking German right now. So
that's a good point.
We wanted gold, right? So there was tons of gold came over to us, so we had most of the world's gold. And so basically our money was partially backed by gold. We were on what I call gold standard light, where other countries could redeem their gold. So everybody just pegged their money to the dollar, the major industrialized countries. And that all ended when Nixon unilaterally abrogated a treaty that 40 other nations had signed.
Gotcha.
I mean, normally things don't happen like that, but he just did it on his own. Mm-hmm. So to get into the 10-10-10, why would you want to have a precious metals asset allocation plan, which is what this is? Well, it's if the dollar crashes. And actually, it's not just that. A really serious stock market crash, or a major real estate crash, an EMF attack, a financial warfare, which we're actually in right now. We're in a financial war, an economic war with China as we speak. But I'm talking about an out and out trying to destroy each other's economies. So any of those things could
well, and I think
trigger.
That's going on another level too, with the computerized markets and the hackers. I forget how many attacks a day the New York Stock Exchange has to fend off just to stay open and stay in business. It's phenomenal. They have a whole team, crew, just focused on that 24/7.
Oh yeah, and the FBI, their cybersecurity team is assisting them as well. It's a serious problem. So any of these things, you know, a crash of the entire electric grid, the internet going down, could trigger a financial disaster where your gold would almost immediately become worth 10 to 15 times more than it is prior, and precious metals would become what they have been for the last 6,000 years, the only real money. I mean, we forget that for 6,000 years, silver and gold were the only money. And it's only been in the last 110 years or so that we've had this experiment with money backed by nothing. Okay?
Right.
So here we are in a situation where people say, oh, the dollar could never crash. Well, I ask people why. I speak on this a lot of places. They say, well, this is America. And I say, what else you got? because our money has already crashed. Our first money in this country completely hyperinflated. So we definitely are a candidate, particularly because no nation in history has ever accumulated more debt than we have currently. We owe about roughly $16 trillion more than we own. We have a negative net worth, which another word for that is bankruptcy. The U.S. is bankrupt. Now, if the dollar crashes...
I know how I look at that, but how does the rest of the world view that?
Well, we fake our numbers. You ask anybody on the street, and they'll tell you the national debt is $20 trillion. Why? Because that's what the nation admits to. Okay, so that's the number that they constantly put out. And I used to wonder, well, why would they admit to something as horrible as that? Well, it's because the truth is much, much worse. And when you add in the more than $100 trillion worth of unfunded liabilities, money that we owe, that we have no way in God's great earth of paying, okay, no budget item for, no revenue source for, and that's mainly Social Security, Medicare, and Medicaid. When you add those together with the admitted national debt, it works out to about $126 trillion. The entire net worth of the United States today, including all the land publicly and privately owned, public buildings, your house, my house, everyone's business, the national parks, and your hound dog. You add all that up, and it's less than $110 trillion. So we are a bankrupt country. The only thing is that we haven't declared it.
Does that take into account any of the state debt? Like, California, they're also bankrupt. So is the California bankrupt situation, is that part of this figure that you just quoted when you say federal debt, or is that a separate issue on top of the federal debt?
It's separate because neither the unfunded liabilities, California doesn't owe on that. It's the U.S. government that owes it. And the national debt that Obama doubled in 8 years, that's strictly federal. It's the national debt is a function of every year that we spent more money, our total spend was more than our total tax revenues and revenues from other sources. Whatever that difference is, it gets added to the debt. And that right now is averaging around $1 trillion a year. Okay. So if there is a crash, it may be the U.S. dollar crashing and then having a domino effect around the world, just like during the Great Depression. They called that the U.S. Great Depression, but really within 6 months it had spread throughout the world. Or other debt-based currencies like the euro. I think that would be the next best candidate because they're horribly in debt over there. They have countries that are spending on social programs over half their revenues. Okay, so the euro could crash and then have a domino effect in which the dollar would go. But I think that overall we're very close to a global currency crash where many currencies would fail. And I think it would be worse than the Great Depression. But like the Great Depression, the little banana republics, the countries where no one will lend them any money, they would probably survive because it's debt that's killing us.
Right. And so when other countries see that New York and California are basically becoming socialist states inside the United States, how does that get viewed?
Well, I started to say, you asked the question, how does the rest of the world view it? And I actually didn't answer. I got off on a tangent.
Okay.
We talk about our $20 trillion debt, but the IMF says the U.S. owes $126 trillion. Okay, why? Because that's the way the rest of the world values their debt. It's the total debt. And so the IMF looks at us, they say, no, you're not getting away with that with us. And because we don't control the IMF anymore like we used to. And so they use conventional accounting standards. They look at the total debt of the United States and compare that to other countries. Otherwise, if we just use what we said was our debt, there'd be a lot of smaller countries than us that owe more money than we do. But
interesting.
The IMF, holds our feet to the fire and makes us be more honest.
Christine Lagarde. So, well, I mean, biblically, it says that the debtor is slave to the lender. Is that how that goes?
Exactly. And that's a frightening thing. Okay.
So we are as a people, we're a nation of indebted servants.
Yep.
Indentured servants.
Exactly.
Yeah. Okay.
And as I say, the only thing that's keeping us from actually defaulting on our national debt is that we are the world reserve currency, so we can just keep on printing more money and finding suckers to buy the bonds.
But we're running out of suckers. It's right.
I'm sorry.
We're running out of suckers to buy our debt.
Sure. 30 years ago, 90% of the reserves in central banks all around the world were U.S. dollars, and the other 10% was gold and some miscellaneous currencies. Well, that's changed dramatically. Only about 60% is U.S. dollars now, and most of the 30% difference has gone into euros. Okay, hardly anybody holds the yuan, the Chinese currency, also called the renminbi, as reserves. So they're among the 10%, but it's like 60% US, 30% euro, and the rest the other. If we drop below 50%, then some other nation is going to take up the slack and become the reserve currency.
And we're talking about the second reserve currency, the euro. That didn't even exist before 2000, right?
Exactly.
Okay.
It was actually started a few years before that, but it was strictly a ledger currency where the nations were just balancing their books against each other, but there was no money. The money was actually first issued in 2000.
Okay.
The paper and metal money.
Gotcha.
Okay, so I first wrote the 10-10-10 plan back, I can't remember how long it was, quite a few years ago, and I've revised it from time to time as different things have happened. But today we've changed it. We call the 10-10 financial survival strategy. What it is, it's an asset allocation plan for using precious metals in your overall portfolio. So I'm not saying everybody should have 100% of their money in gold. I don't even think they should have more than 50%. I break my own rule because I really understand gold. But in general, the financial planning principle is no more than 50% in any one asset class. Mm-hmm. So it's an allocation plan, how you distribute the money that you have in precious metals. It's also a strategy for how to use precious metals to protect your assets. And it's a Bible-based approach to safety and profitability using precious metals. So here's the three components. Bottom right is what we call junk silver. Mm-hmm. It's called junk because it's 90% silver. It's not 100%. You could also use silver bullion, which is 0.999 or 9999 fine silver. Mm-hmm. But most people use this because it's been issued by the government. It's been used as real money, but you want to make sure that you get pre-1965 coins. Mm-hmm. I prefer quarters and dimes because if you have a $50 or a silver dollar and you go to the store, it's going to be worth, a silver dollar will be worth $400. So somebody likely to knock you over the head for that.
Well, now, even the penny, even the lowly penny, wasn't before 1964, wasn't that actually 100% copper?
Yeah, it actually, it still is.
I thought they'd put some kind of alloy or something in there, mixing it.
No, during, I think it was World War II, we went to zinc because we needed the copper for wiring and so on. But other than that, it's not going to go up in value in a crash. It may go up some.
Yeah, I was just, okay, gotcha.
But the coins that you're looking at now, the ones that are being issued now, are copper. Okay. Are supposedly silver coins are copper, and then they have a little copper and nickel wash on them that makes them look like silver.
Wow.
Okay. Now above them, you see another type of bullion, and that's gold bullion. And I think I've got one from just about every one of the major countries that issues bullion coins. Every country issues them, but these are ones that people seem to like. The Maple Leaf, the Britannia, Krugerrand, the American Eagle, the Buffalo, and so on. Okay, then off to the left, you see some different examples of investment grade precious metals, and they can be silver, they can be gold. The two top coins are silver and gold, milled or machine coins. The bottom one is an ancient coin that was actually handmade. Those are called hammered coins. They're made with a sledgehammer. The interesting thing is, the more rare a coin is, the less the metal amount matters and the more the rarity does. Like, for instance, the coin at the top left there, for a long time was the most expensive coin we'd ever bought, and it's silver. You'd think it would be gold, right? But that was, I think our client got it for $640,000. It's now worth between 1.2 and 1.3 million.
Now that's one coin, the one in the upper left of the slide. Okay, can you tell us a little about the coin?
Yeah, you see at the bottom there where it says Simon.
Okay.
Okay. Well, you remember Charles I? He was overthrown and beheaded by Oliver Cromwell. And Oliver Cromwell was not a royal. He didn't have royal blood. So he became sort of the king, but they couldn't call him the king because he wasn't royal. So he became the Lord High Protector, they called it. And then when he was eventually overthrown and Charles II, the king's son, came back from exile and took over the country, he wanted various engravers to submit, it was sort of a contest, to submit designs for coins that would be used and would picture him. So Simon was one of the people that did it, and he was the best engraver in the realm, and actually he's still considered that the best engraver England ever had. This is a very unique coin. I could talk about this one coin for hours, the things about it. But he ended up giving the gig to becoming the master of the mint to one of his drinking buddies from, I think from Holland, while he was in exile over there. So Simon obviously objected to this, and so he made 12 of these coins on his own, and he gave them to different members of the court so that they would, it was 20. He made 20 of them, and they would get to Charles II, and eventually one of them did get to him, and he gave him a job. It wasn't the master of the mint, but he did give him a job at least. And so he designed coins for them. Well, only 12 exist today, and it's one of the most famous coins in the world, and unique in a number of different ways. It's actually got 2 lines of engraving around the edge. They call it the Simon Petition Crown, because he actually put his petition, his appeal to the king in writing, but you have to have a magnifying glass to read it. Like, say, a thin coin, 2 lines of writing all the way around the edge. So this one that you're looking at is the best known example in the world. All the others are in the hands of museums or collectors who will never let them go. So we were very fortunate to get this one. But people shouldn't get scared and think, oh, $640,000, I could never afford that. There's lots of really great rare coins you can get for a few $1,000. Okay, why are there 3 categories? Well, first of all, your first 10 is what I call your kingdom money. There will be a crash at some point, and when it's over, these types of coins will go up just exponentially in value, and most of us wouldn't be able to spend the money we're going to have. So in my case, and I think a lot of other Christians, it will go into the kingdom. I mean, you can only wear 1 pair of boots at a time, right?
That's right.
The second would be used during the crash for wealth preservation and larger purchases. And the third is your spending money. So let's go back to the previous slide for a second. The rare coins off to your left, you wouldn't spend them during the emergency. You would hold on to them.
You don't want to trade one of those for a loaf of bread and a jug of milk.
No way in the world. The coins on the right, they're selling for around between $1,200 and $1,300 now. They'll go to $15,000 right away. So you would use that for larger purchases. Say you needed a truck to go out in the countryside to get food because there's no food being delivered in the city. Or let's say you hadn't had enough sense to buy a shotgun now and you could buy it for $300 or $400. It might cost you $10,000 because it's going to be a sought after item. I mentioned earlier that I like the dimes and the quarters best. That's your spending money. That's what you use for gas and food and clothing and so on. And you don't want to carry the silver dollar around. It's going to go up in value too. An ounce of gold will go to $15,000. An ounce of silver will go to about $400. So somebody will knock you over the head for that. So it's better to have the smaller coins that you can use to make the everyday purchases. Okay, so what we're not talking about is putting 10% of your net worth in any. Sometimes people see 10, 10, 10. They say, okay, 10% rare, 10% gold bullion, 10% silver bullion. That would not work, and it would be particularly bad in a crash. Okay, you want to allocate according to what I'm about to show you. And basically, the first 10 represents all of the money that you put into precious metals as a percentage of your net worth. Why 10? Well, for years, financial planners, including the financial planning training organizations, have recommended 10% of net worth in precious metals. The reasoning behind that is that gold will go up at least 10 times in value within days of a complete crash. So even if all the rest of your assets, let's say your assets are mainly in stocks and they evaporated, or maybe you had a lot of real estate, well, you still have the real estate, but nobody has the liquidity to buy it. So basically it's locked liquidity. So you would replace your net worth if you had 10% in precious metals and there was a crash, you would replace it, be able to have the same kind of lifestyle with just having 10%. So sometimes people say, well, can I put more in? I say, of course. And they say, well, how do you decide? I said, well, if you're the kind of person that believes that there might be a crash and it might happen in the next 5 years or so, then the minimum of 10% of your total net worth is appropriate for you. If you're like me and you believe there's no way we can avoid a crash and that it could happen in the next 6 months or a year, then you go to the high end, 50%. And if you're somewhere in between those, you put in 20 or 30 or 40. There's also practical considerations. Like I've had a lot of people say, I'd love to put 50% of my net worth into precious metals, but a large part of it is locked up in annuities or locked up in land or whatever, and so all I can do is 25%. Well, that's okay. You know, you do what you can do. But remember, this is a flex number. The 10 does not necessarily mean 10. It could be 10, it could be 30, it could be 50. Okay, the second 10 is a fixed number. It's 10% of the first 10. So 10% of all the precious metals that you buy should be in bullion.
Okay.
And that's gold and silver bullion. And the third 10 is also fixed. It's a 10%.
Now, are you talking gold and silver bars or bullion coins?
Either.
Either one, okay. Okay.
But preferably the coins.
Okay, right, because they're spendable. I mean, trying to shave off part of a gold bar or silver bar is kind of tough when you just need a loaf of bread.
Yeah, and you could do it. You could take a pocket knife, gold is soft, shave it off. How you can evaluate it?
Right.
You have to have a very, very accurate gram scale. It just doesn't make sense. So the coins are already verified, particularly if they're issued by a sovereign government. Their fineness, their purity, and their weight are all printed right on the coin. So the third 10 is also a fixed number. It's 10% of the second 10. So of all the bullion money, 10% of the bullion should be in silver bullion, 90% should be in gold. So basically, it looks like this. You have, let's say you had $100,000 that you decided to put in precious metals. Okay, 90,000 would go into rare coins, 9,000 would go into gold bullion, and 1,000 in silver. Well, let's say you've only got 10,000 you could put into it. Well, then it's $9,000 into rare investment grade coins, 900 into gold bullion, and 100 in silver bullion. See, $100 that doesn't sound like much. Listen, if things happen the way that the experts believe they're going to happen, a thin silver dime of 90% silver would buy your groceries for the whole family for a week. Okay.
Wow.
It doesn't take a whole lot in precious metals. Okay. I do recommend that everybody should buy about several $100 worth of junk silver for each member of the family. So even if that means that you're out of balance a little bit with the gold, maybe you've got 20 to 25% of your bullion in silver because you still have as much money overall. That's okay. All right. So the flex, you know, like I say, the general wisdom has been 10%, but the danger is a lot greater today, and so a lot of people are recommending 50%. I think that you should pray about it. Every financial decision you make, you should ask the Lord about it because it's His money, not yours, right? So if you don't think there's much of a possibility of a major dollar event, whatever it is.
Well, let me throw this in as you make this point. Don has been very active in the chat today, and he just put in there, I just don't see the world's governments allowing a crash. They will do whatever is necessary to stop it. It would destroy the government's power and people would revolt and there would be chaos. World governments work together to ensure stability. They have no other choice. What's your thought on that?
Well, I would just go back to history. The most famous example is the Weimar Republic. Germany was totally destroyed. Okay, it was 4 marks to the dollar.
It took a wheelbarrow of money to buy one loaf of bread. So I've been told.
Yeah, actually, there's an apocryphal story about a guy who had a wheelbarrow full of cash, and he had to stop at a store. And he left it on the sidewalk, and when he came back, the wheelbarrow had been stolen.
And they left the money?
Yeah.
Okay.
They didn't want it. I mean, there are actual photographs in Germany and Hungary and many other nations of street sweepers sweeping stacks of money that people just dropped on the sidewalk into the gutters, okay, cleaning the streets. So it was 4 marks, which was their main monetary unit, to $1. So a mark was worth about a quarter. Within 4 years, it was 4.2 trillion marks to the dollar. And everything just became totally dysfunctional. It's not that the governments want to let it crash and burn, but they don't have a choice. Look at Argentina. Just as recently as 1980, people lost confidence in their money. The store shelves were stripped bare. You couldn't buy anything, no matter how much money you had. And the employers were having to pay people twice a day, not twice a month, because the money devalued so quickly. They got it to where they're having 10,000% inflation per month. Zimbabwe, very prosperous country in Africa, their dollar was almost exactly equal to ours. It was $1.25 Zimbabwe to $1 US. Again, within I don't know what it is, about 4 years, but it seems like most of the hyperinflations seem to happen over a 4-year period of time. Within 4 years, they were, the largest note had been a $100 bill. Within 4 years, they were printing $100 trillion bills. And remember, their money had been almost the equal to ours. It was now 3 cents was the value of that $100 trillion bill. Okay, so again, it's not that the countries, if they had any way to prevent it, of course they would. But when people lose confidence in their money, that's it. That's what happened in Germany. It's what happened in France. I mean, the people were rioting in the streets in France, and the government promised to, because they'd been on a gold standard, and when they went off the gold standard, their money just started going down, 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 down. So eventually they were forced to go back on a gold standard. That was back in 1789. So this is not something that's happened just recently. The Roman Empire went through hyperinflation. That was the cause of the fall of the Roman Empire, because they had taken their silver money, which was 94% silver, and kept adding lead to it and devaluing it to where it's down to 1% silver in the silver coins. So the centurions, who actually were the strength of the Roman Empire, started deserting. Yeah, the centurions, the soldiers, they were deserting, going home to farm so that they could feed their kids, because nobody would accept the money that the government was paying them with. So,
okay, now that's a great point, and here's Don's counterpoint. But the world economy and governments are inextricably linked now. They were not in the past, so historical comparisons do not apply. Governments in old days were separated and not in sync. We look at Greece, old days, they would be in trouble, but nowadays they are not allowed to fail. If I'm not mistaken, Greece failed just recently. But let me go on with Don's comment. Same would apply to any medium or large country. Oh, here he even put this in. Greece was a recent example of how there is a way to prevent it. But boy, that was a very painful scene with all those older people who did not have ATM cards, standing in the streets hungry, unless they had children or friends to take care of them. So Don ends his counterpoint here with, ask him why Greece didn't fail.
Okay. The European Union is like the United States. When this country started, we were 13 nations. Okay? The colonies were independent sovereign nations. We were not a country all homogenous. We were still 13 sovereigns, as witnessed by the fact that every one had a constitution. We joined together for certain reasons, in order to provide for the common defense, for instance, because the colonies on the outside, particularly on the ocean, would bear the brunt of any attack. But over the years, we have morphed into a nation where the county or the state lines are just political subdivisions of the United States, like the counties are political subdivisions of a country. So California is bankrupt. A number of cities within California, now they haven't declared bankruptcy, but a number of cities within California, primarily the large city of Stockton, have declared bankruptcy.
And other major cities throughout the country, not all are in California.
Oh yeah, Detroit's gone bankrupt. There's a whole list of them. But to Don's point, California is not bankrupt because it's part of the United States.
Okay.
So basically the rest of us are paying for California's sins. It's different in Europe. Okay, the European Union hasn't become homogenous like the United States, and it took us a couple of 100 years for us to give up our sovereignty and our control over our own state affairs. A state, by the way, means nation, like the state of France, the state of Israel. It used to be the state of Florida actually meant something. Okay, but in Europe, that's not the case yet. And I believe the European Union is going to break up. But at the moment, it's still together. Now, officially, according to the laws of the European Union, when Greece got so much in debt and their GDP got so low, they were required to be expelled from the European Union. Well, they didn't want to do that because there was already rumblings in England of wanting to exit and so on. They didn't want to see any country leave. Spain was not far behind. So what they did is just financial sleight of hand. Greece defaulted on its currency, but they didn't call it a default or on its debt. They called it a, what do they call it? An arrangement or whatever. Anyway, people got 50 cents on the dollar for their money, and most of that was contributed by the more wealthy nations of Europe, like France and Germany. It was a political thing. They didn't want Greece to fail, but Greece did fail, no question about it. Once the European Union breaks up, you're not going to see other countries coming in and bailing out countries like that. They had a political reason to do that. Same thing with Cyprus. Cyprus just basically stole 50% of all the money in bank accounts in the country.
They sure did.
And they said, well, why? I said, well, the government needs it. And remember, this is after-tax money. People had paid taxes on it. This was a retirement money they had in the bank, and the government just came and took 50% of it. And the next day, the finance minister of Denmark made a statement publicly, this is the model for the rest of Europe in the future. And of course, there was such an outcry over that he had to retract his statement. You know, like all these people make statements here in the United States, and then they apologize the next day and say, that's not what I said. It's clearly what they said, but they said I really meant something else, you know.
Right.
So
now Don seems pretty convinced that he says the U.S. will not allow any U.S. state to fail financially, that there's no pain here. Yeah, California may be bankrupt, but people are not suffering. Yeah, I don't know that I completely agree with that, Don. BR is a way to constantly refresh and wipe away bad decisions, allow them to start all over again, but there's nothing catastrophic like you're implying that could happen in the future. You know, on that statement, I just have to refer you to Revelations. You say that the IM is not suffering, or MI? You're talking about Michigan or the IMF? You've spoken about the IMF a number of times, but we are, what, 60-70% of the IMF, and the IMF tells us that we're $110 trillion in debt when all we'll admit to is 20 of it. Is that right?
126 trillion. But let's use Michigan. Detroit went bankrupt. Okay, I can get on a plane today and fly up to Detroit and buy all the houses I want for $10,000 to $20,000. And
true.
I'm not talking about falling down ghetto shacks. I'm talking about nice 3-bedroom, 2-bath houses that nobody can afford to make the payments on, so nobody buys them. And if somebody wanted to take a really long view on things, you go up there and spend $1 million, and if they ever turn their economy back around, eventually all those houses that you bought for $10,000 will be worth $1 billion. But the fact is, people are suffering right now. There are people in this country who are starving. Okay, people
go to Appalachia.
Veterans who are living on the street, wounded veterans and so on, and we're spending billions of dollars to go and take care of other countries, and yet our own people are suffering. So there is suffering here. It's just that the people that control the purse strings aren't suffering because they make sure that they get taken care of.
Yeah. Well, Don says, I completely agree. We are in terrible shape financially, but it just doesn't matter. And I have a hard time going along with it. Doesn't matter. Look at 2009. Government stepped in and helped people keep their homes at other taxpayers' expense. Yeah, but how many people lost their home in 2009? Good God, there was plenty of suffering going on then. I know people.
Well, also think about this. You know, we had the big bailout, right? And the government spent billions and billions of dollars
buying their own debt, right?
Yeah,
to print money. Now they got to make it disappear.
Almost $1 trillion. I think it was 870 billion or something like that. They can't do that today. Okay, they wouldn't be able to duplicate that if we had another major crash, because no one's buying our debt. What's happening now, when you have a treasury auction, used to be, I'll go back a few decades, there's a treasury auction, 70% or more of the instruments were bought by Americans, and 30% were bought by foreign countries to go into their central banks. Then over the years, it switched because America's, the people who can afford to buy bonds, particularly the bond funds, the biggest bond fund in the country, I can't remember the name of it right now, it's based out in California. Was their whole business, was buying and selling American bonds. They totally stopped buying American bonds. Okay, so it went to more of a 30% being bought by Americans and 70% being bought by foreigners, because the foreigners had more confidence in our money than we did. Now, guess who's buying the majority of the government?
The guys that print it.
Debt. It's the Fed. The Fed is, it's smoke and mirrors. It's like you, Dwayne, taking $100 out of your left pocket and put it in your right pocket, saying, I lent myself $100. Okay, it's crazy, but the other countries are staying away in droves from our treasury auctions, and it's only going to get worse. I mean, a few years ago, I don't know what the numbers are now, but we were spending 18% of our total revenues just on the debt, on the national debt, and it's been almost 4 decades since we paid a penny on the principal.
Right.
Okay. So people think that can just go on and on and on, and you just print more and more money. No, you can only print it. You know, when they print money, the way it happens is the Treasury prints money, and then they
by
exchange
printing,
it.
we actually mean digital entries in the Fed's computer. Yeah. Okay.
Today it is, but used to be they would actually print up pretty pieces of paper, and then they'd exchange it for other pretty pieces of paper, which are debt instruments. Okay, well, the time comes when nobody buys that debt. That's when things really get ugly. Okay,
at some point, the collective consciousness in America and perhaps the world, all of a sudden, everybody wakes up one morning and it's just there hanging in the ether. Oh my God, it's a house of cards. Look what they've done. And then, bang. That's what happened in Germany, Weimar Republic.
But let's come up to more modern times, because Don was saying it's not like things were back then.
It's different.
The Weimar Republic,
okay. All right.
The Weimar Republic was a modern economy, by the way. Okay, not to the extent that we are now, everything electronic, but it was a very sophisticated economy. It was only because of the war that they got in so much trouble. But let's take something more recent. Argentina was the 5th largest economy in the world. The 5th largest, all right? And they started doing exactly what we're doing now, spending far more than we were taking in taxes. And over a period of 10 years, from 1980 to 1989, inflation got bigger and bigger and bigger. And then all of a sudden it just exploded. And like I say, it was up to like 10,000% inflation per month. This is a modern economy, the 5th largest economy in the entire world. And it almost took down the United States because our biggest bank, Bank of America, was heavily exposed down there. They were loaning money like crazy because the Argentinians, because of their inflation, were paying very high interest. So at one point, the financial press referred to Argentina, or referred to the Bank of America because of the loans to Argentina, as bankrupt of America. So when everybody was squawking about, why is the U.S. bailing out Bank of America in 2008, they have short memories. We had already bailed out Bank of America once before, because if they'd gone under, they would have taken a whole network of other banks with them. So in that case, we did. We went in and we rescued Argentina. But there's not going to be anybody that's big enough when the United States economy starts to fail. The only one that's big enough to rescue us is China, and they hate us. So the only way they're going to rescue us is if they get to take over. So, you know, I'm not trying to, you know, spread doom and gloom and scare people, but all I'm saying is, if you look at the facts, we're in a very dangerous situation, and so everybody should be smart and protect themselves.
And we're a nation divided.
Metals,
we're a nation divided because if this crash that we're talking about or whatever, if it were to happen today, do you think Congress could agree on what to do? I mean, we can't even hold a State of the Union address. We can't even put a fence on the southern border. We can agree on our nation is in gridlock. How in the world? Who would make these decisions? Who would coordinate this? How could we get enough people to agree on it? I mean, who's got the keys to the car?
Yeah, I hear you. So the only answer really is for the nation to go back on a gold standard and go back to sound money. But you know that's not going to happen. All right?
Because nobody knows where the gold is.
Well, yeah. If we had all the gold that we say we have, let's just assume that everything in the New York Fed is actually there, that there are stacks and stacks up to the ceiling of gold in Fort Knox.
And all the shares of GLD actually represent gold. Oh, that's so funny. That made my chest hurt. Go ahead.
But you know, I'm talking about gold that the government supposedly owns. If we did, we've only got enough to cover probably 3 to 4% of all the money that we've issued. So that's a problem. Also, where are you going to find a politician that's going to say to people, folks, we got to get back on sound money, so you're going to have to tighten the belt, no more free stuff, you're going to have to earn what you get, and so on. You don't get elected on that kind of a platform. So people always ask me when I speak on this, say, well, you know, can we get the country back on a gold standard? I say, you can't. But you could put your family, your church, your business, your ministry on the gold standard simply by buying an appropriate amount percentage-wise. You know, a small business would buy a whole lot less. I'm friends with Patrick Byrne, the
right, Overstock. Yes, so am I. Great guy. And you mentioned this to us, but please explain it again. What he did.
Well, he bought enough gold to where he could pay every one of his employees for a year and just put it in reserve because he believes that it's gonna happen. And he's a very smart guy.
He is. He's pretty much the smartest guy in the room, whichever room you're in.
Exactly.
Unless you're there, of course, but go ahead.
So, you know, we all want to believe that the government is going to swoop in and protect us. And Don, I understand why you would feel that way. You know, it's called normalcy bias. You know, we tend to believe that things are always going to be the way they've always been until they're not. Okay, so for a long time, the government has taken care of things. If a city gets flooded, they go in and they rescue everybody. But we've seen lately where we don't really have the resources, like in Puerto Rico. Puerto Rico was so in debt, and I love Puerto Rico, by the way. I used to go down and preach in churches down there, and a lot of people I know down there. It's a lovely country, but they were so terribly in debt that they allowed their infrastructure to crumble. So it wasn't just that we didn't send them enough generators and this and that. Their infrastructure was so bad that the hurricane just destroyed it all. So the whole country, it's not a nation, it's a Commonwealth, but the whole Commonwealth has to be completely rebuilt. Okay, so there's just not enough resources to take care of everybody and everything if we have a really bad situation. Just think, one EMP attack could destroy.
How many nations are capable of delivering that now?
At least a dozen that I know of, probably more. But we know that North Korea flies 2 satellites over the United States every day, and one every 12 hours. And they're positioned at the proper height to where one nuclear explosion several miles above the Earth could take out almost every piece of electronics in the country, which would mean that unless you had a car from 1950 or before, it ain't going to run. Okay, your telephone won't work unless you've got an old dial-up telephone with copper wiring. Computers, forget about it. Everything runs on computers. So the country would be brought to a screeching halt. Think it can't happen? Well, in the 1800s, there was a solar flare, which wasn't as strong as one EMP attack can happen. And it took out all the telegraphs in the country. Fortunately, it was before telephones. But telegrams were the major way of communicating if you had to get something out quickly other than the mail. And they were all taken out. Look it up. It happened just from a solar flare.
And we have no way of preventing that from happening again?
No, unless you know somebody can stop the sun. You know?
Right, that's my point. Okay.
Here comes the sun.
Yeah.
So again, I'm not a doom and gloom guy. I know that the Bible says, "I've never seen the righteous forsaken nor a seed begging for bread." You know, I know that I'm hidden in the wings of our Savior. I know God's going to take care of me, but I believe He expects us to be sensible.
Good stewards.
Okay, to prepare. I taught at a theological university on survivalism. The reason I did is because I'd heard so many people mocking people who put up water and medical supplies and food supplies and so on in case of a disaster. Well, I live in Florida where that's every day. I mean, you do that because we have hurricanes and you can be without electricity for 3 weeks easily, you know. But in most of the country, survivalists are mocked. But as I taught to all these doctors and master's degree people and theologians, the Bible talks an awful lot about preparedness and says that it's a foolish man who doesn't prepare. So all I'm saying today is get gold, get silver. It's the only biblical money. It's the only money that's worked for 6,000 years. And by the way, it's the only constitutional money. What we have today is not constitutional money. Now, they passed an amendment. They formed the Federal Reserve, which counterfeits money. So one of my favorite jokes is, what do you call a guy who makes money worth nothing in his basement? Call him a counterfeiter. What do you call a guy in Washington, D.C. who makes worthless money? Well, he's a congressman,
Exactly.
So just be prepared, folks. Don't let something sneak up on you and find that you have nothing to work with. No way to buy food for your kids. No way to take care of yourself except going back to the Stone Age and trying to do barter and trade.
That's a lot to think about. A lot to think about. Now, I know we've run long today, and I know you probably have to go, and I'm going to have to go too, but how much more is there to the discussion here? Because we can always pick it up when you come back this coming Thursday.
Well, let's do that, because there is more.
Okay.
And
let's make it a part 2.
I think people would find it interesting.
Yeah, I'll get this out on the internet for people to enjoy as part 1, and then I will let them know that part 2 will come out next Thursday.
Sounds good.
How does that sound?
Okay, God bless everyone.
You got plans for the holiday?
Probably write some articles.
Okay. Very good. I didn't know if you were like the Grand Marshal in a parade or anything.
No, they don't have parades down here.
Oh, Don had one more. He said, in super bad situation, people will steal your food and gold by force, which ties into another comment that was made. Wait a minute. I had scrolled all the way to the top. How did that happen? Let me go back. You mentioned something about lead. Okay. Mm-hmm. And interestingly, there was a comment well before you mentioned that. Bob Z says the most precious of all metals, when comes thine apocalypse, shall be lead. Shall be lead. For at thy corner store, me standing there with 30 units of lead in mine clip, shall trump thine gold, which thereafter shall be my gold. So, tongue-in-cheek, Bob Z, you always deliver a very interesting, often hilarious perspective, but that's not so hilarious. And well,
and it's not
gold,
off the mark either.
God, gold, and guns, right? Is that the 3 Gs?
Right. Yeah, I was invited to speak at a survivalist convention, and I'd never been to one before, and I don't know why they asked me to speak. But
does everyone have a beard?
No.
Oh, okay.
It was very interesting. Most of the people there were Christians, which kind of surprised me. I would say probably 60% of the people I met anyway. And yeah, there were some bearded people, and there were some people walking around with
camouflage
ARs on their strapped over their shoulder and stuff.
Oh,
but they asked me to be the keynote speaker. So guess what my title was?
What?
The 3 precious metals: gold, silver, and lead.
All right, so you're on the same track there. I got you.
Well, I used to be a Marine, and I used to be a deputy sheriff, so I have my share of items that can be used to kind of move those projectiles.
Mm-hmm. Right.
And I am well stocked in projectiles. So yeah, I believe that the time's going to come when you may have to protect your family with a gun. I hate the idea. I've never shot anybody. I was in the Marine Corps during Vietnam, and I fortunately never had to go kill anybody. But if someone's coming after my family, they better watch out. That's all I got to say.
I hear you. Okay, on that note, let me bid you adieu so I can get out of here and get on with the rest of the day. And we'll see you back here on Thursday. And then if you have some free time on Monday or over the weekend, please give me a call. We got a couple things to chat about.
You got it.
Okay.
God bless.
I look forward to it. Thanks so much.
Bye-bye.
Bye-bye. Okay, guys, that brings us back to the market. I had drawn a little circle before we switched this out, and so we've come back to, I believe, the 38% fib retracement. Now let's go look at that weekly. Okay. Oh, that's gold. We got to put that back to the ES. Go. There we go. All right, that's what we were looking at. We'll get rid of this for now. Okay. So we touched it. We've come off a little bit. The high 2676.50. So that's right in that area. Now, the big question is, what happens now? On the weekly, do we find resistance, as we often do on these pullbacks, okay, which begins another leg, a weekly leg to the downside, which could find support here, could find it here, and it could find it down in here. Or does the monthly prevail? Remember, we got something happening here that hasn't happened, as far as I can tell, since 2013 on the continuous chart. Thank you very much, Don, for the spirited debate today. Really enjoyed that. Join us whenever you can. It's always nice to have anyone in the audience share their thoughts and ideas and input with us. We are a show of the people, by the people, and for the people. If you've never been to CFRNgold.com, that's just one word, CFRNgold.com, go there and you can get a free starter kit, which will just give you some more basic information about investment grade gold. Is Dr. Tom an investment grade gold guy, dealer? Well, he sources investment grade coins. Some refer to them as numismatic coins. I haven't heard him use that term so much, but I think that covers it. He sources them out of England, sells them here in the U.S., and he's gone through in past shows why that is, the reasoning behind that. So does he have a coin shop on the corner? I don't think so. But does he have buyers in Europe? Yes. Does he have a host of clients here in the U.S. and other parts of the world? Yes. And so let me just say that the answer to that question is yes. So is the whole thing just self-serving to sell some gold coins? I don't think so. I mean, I think it runs deeper than that. But is he, in fact, the guy, if you decided after a preponderance of the evidence and your own due diligence, if you decided that you wanted to become involved at some level with investment grade gold, whether it's the 10-10-10 plan or something else, I personally know of no one else in that area that I trust, and I know no one else that I would refer you to other than him. He's been a part of the show now for quite a few months. He's a real renaissance man. Every week we seem to peel back another layer to the Dr. Tom onion. So it's always great having him on the show. His regular day is Thursday. He'll be back with us next Thursday for part 2 of this discussion. Don, I really hope you can come back next week. And anyone else in the audience or anyone who sees this broadcast out on YouTube or on Telegram between now and next Thursday, please come with your questions. Dr. Tom, I've never heard him shy away from a question. He always has an answer, what he, believes to be truth. So, join us, okay? Now, it is, well, I mean, we've run really long today, and that's kind of to make up for the fact that we had to cut short yesterday, and I think even the day before. We typically wrap well, we've gone like 3 hours today, and that's okay. I don't mind. I do plan to have my internet fully restored for the Logic 247, for the Concierge Trade Alerts, for all of that by Sunday evening, whatever it takes. I'm gonna have it resolved. There may be some stuff to come out in this final hour this afternoon. So kind of keep an eye on the Telegram channel, and I'll see you there. Real quick, we spent 3 days talking about Joseph and asking God for a dream. So we're going to wrap the week up with part 4. Genesis 45:11 says, "I will provide for you." That's a statement. I will provide for you. Now, the dream that God gave Joseph was not about feeling good because he was now the number 2 guy in Egypt. He went from a hole in the ground to jail to being the number 2 guy in Egypt. No matter where you're at in life, no matter what problems you have, that's got to give you hope. I mean, that's quite a distance to travel. It didn't happen overnight, but he, as they say, kept the faith. He became the number 2 in guy. Joseph was not feeling good because he was now the number 2 guy in Egypt, but about positioning himself, or God positioning him, to feed his family and the world in a time of famine. Wow. I guess God could use anybody, right? Even the least of these. So don't miss the point here. When God gives you a dream, it will bless you and others. John 3:16, we all know that one. Some of you got the tattoo. For God so loved the world, right? Gave his only begotten Son. God's plan is not to make you an icon, but an instrument to fulfill his will. From one of Joseph's brothers would come the Redeemer of the world, but his entire family was being threatened with extinction. So God put a plan in place which involved Joseph interpreting Pharaoh's dream and being elevated to the throne so that his plan, God's plan, could be accomplished. And here's another thought. Joseph's story proves that a God-given dream, not one from rabbit stew, but a God-given dream, will change your attitude toward others, including those who mistreat you. He forgave his brothers. It will make you more gracious, loving, and forgiving. Remembering how they betrayed him, Joseph's brothers trembled as they stood before him, realizing that now the tables had been turned and he held their fate in his hands. But he refused to retaliate or even utter a word about what they had done. Listen to what he told them. I will provide for you. That whole love your enemy thing. Instead of revenge, he wanted the relationship to be restored. He looked beyond their actions and saw God at work in all he had been through. In Genesis 50:20 it says, "You meant evil against me, but God meant it for good in order to bring it about as it is this day." That's Genesis 50:20. How you and I treat others, especially when we're in a position of strength, determines how God will treat us. That's our good word for the day and for the week. Thanks so much for tuning in. Now again, Monday is a holiday. Sunday night, Globex will open 6 p.m. Eastern as normal. Markets will trade up until about noon on Monday. So there's going to be no radio show, no live training room. There will, however, be alerts on the Globex Open Sunday night, Concierge Trade Alerts, but keep in mind that those will, you should keep in mind it's holiday trade. Not to say that markets can't move a great distance on light volume on a holiday. It happens. I've seen it happen. Just be careful out there. It is the weekend, so a long weekend. Spend some quality time with your family. Of course, I'll see you in church on Sunday. Thanks so much for tuning in. Wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. And this is where we typically insert the awkward silence. Okay, yeah, here it comes. Wait for it. See you Sunday night.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.